Hi, it's Lynnette Khalfani-Cox, co-founder of AskTheMoneyCoach.com. I want to share with you today some tips, 2 tips exactly, on how to establish or reestablish your credit rating. Now, I know some of you have been told that you can't get a credit card or you're not eligible for a loan because you have either a thin credit file or no credit rating whatsoever. On the flip side, some of you have made mistakes in the past. Maybe you've had delinquent accounts or collections. Perhaps you've been through a bankruptcy or had some other financial disaster hit you, and now you're looking to reestablish your credit rating. The 2 tips I'm going to share with you right now will work for either case if you need to establish credit or reestablish credit. The first bit of advice I want to tell you is that you should get a secured credit card. A traditional credit card is an unsecured credit card, but with a secured credit card, you essentially have to put up some money that acts as a deposit and that establishes your credit limit. So let's say you put up $500 into an account. What happens is you get a secured credit card with a credit limit in that equal amount, $500. The advantage of having a secured credit card is that you can't go into debt. You also can't go over your credit limit because the charges you might try to make won't be approved if it's in excess of the amount that you have on deposit. But best of all, if you use that secured credit card every month and pay the bill on time, your credit history does get reported to the 3 credit bureaus, to Equifax, Experian, and TransUnion. So that can help you to reestablish your credit rating and to rebuild your credit profile. Another strategy that's helpful to anybody who's looking to establish or reestablish credit is to use a technique called piggybacking. Now, you might have heard about this in the past, but you might not be aware of whether or not it's still applicable, relevant, or whether or not it still works. Trust me, it does. Piggybacking is when you get added as an authorized user or as a co-signer on someone else's credit accounts. Now, of course, you only want to do this when the person whose accounts you're being added to has good credit. You don't want to get yourself added on to anybody who has bad credit. That's not going to help you in the least. As a matter of fact, that'll hurt your credit rating. But if you have someone, say a spouse, perhaps a parent, or someone who you live with, if you can be added onto their credit rating in terms of not added onto their credit rating, but added onto their credit account, such as a credit card, maybe a car loan, something to that effect, that can help to boost your credit rating because you, in effect, kind of pick up the positive payment history and the positive credit aspects of that person's credit profile. Your credit profiles don't get merged, even if you're married to the person with whom you try this piggybacking technique. So you still maintain separate and distinct credit profiles, separate and distinct credit identities, but you do get the benefit of their past payment history on those credit accounts under which they've actually paid the bill on time. So piggybacking is a good technique to try if you're trying to boost your credit rating. If you want more tips on how to improve your credit rating, I encourage you to play around a little bit on the site here on AskTheMoneyCoach.com, or maybe even pick up a copy of my book called Perfect Credit, 7 Steps to a Great Credit Rating.